Amidst COVID-19 pandemic, fuel distributor AKRA Corporindo has successfully achieved revenue and net profit growth.
Amidst COVID-19 pandemic, fuel distributor AKRA Corporindo has successfully achieved revenue and net profit growth. Based on financial report, AKRA Corporindo or AKRA obtained net profit as much as 431.57 billion rupiah, or increased by 10.44% year-on-year. The higher company's net profit was supported by revenue that up by 2.98% to 10 trillion rupiah from the previous year realizations at 9.7 trillion rupiah. The revenue was mainly contributed by the trade and fuel distribution segment that reached 7.36 trillion rupiah, or inclined by 8.08% year-on-year. The contributions of trade and fuel distribution segment hit 73.6% of total revenue in the first half of 2020. Not only obtained revenue and net profit growth, AKRA has also successfully minimized its cost of revenue. In the financial report, AKRA's cost of revenue only up by 1.24% year-on-year to 8.98 trillion rupiah. The growth of cost is relatively smaller than the company's revenue growth. From all sources for IDX channel.
How are you?
Good, good. How about yourself?
Yeah, good, but yeah, but can you hear me?
Okay, yeah, I can hear you. Yeah. Okay. Thanks for the opportunity. I mean, like a lot of change since the last time we have this conversation. But I mean, like even during the this challenging time, it seems AKR seems to be able to perform quite well in the first half. I mean, like the second quarter is a bit weak, but that's kind of like expected. So I mean, like, can you tell me just a bit like what's behind the momentum in the first half?
Yeah, thank you, Barry. Mainly, if you see the AKR business model and also the products that we distribute, are products that are required day in, day out, and like whether it is petroleum products, mainly high-speed diesel, which is used predominantly across the economy for mining, industry, fishing, and others, which have been relatively less affected and continue to operate during the physical distancing and social SB, which was I think. So I think the diesel, which consumes a big part of our petroleum sales, continue to do well. And also the basic chemicals, which are raw materials in use in various industries, these continue to be used in various industries. Yeah, that did get some impact because of social distancing and closure of factories, but relatively been resilient. Similarly, the good part about AKR business has also been the industrial estate, the Java Integrated Industrial and Port Estate, which also has started contributing towards the revenue and also the profits ever since second half of 2019. So I think all these three business segments are doing well, I would say. The nature of our business also, it was in the exempt sectors during the PSSB, so we were not, impacted so much by closures. But yeah, the company also took necessary measures during the emergency which was declared in order to keep our operations going with various protocols and also various measures being taken back. That's why overall, if you see the company during the second half quarter also experienced, the energy markets experienced huge turbulence. But given the business model of AKR, where we did not take positions, and we are more focused in terms of achieving the targeted margin. So whatever is the oil price movements, we pass it through to the customers, and we also manage our forex risk quite effectively. So all these enabled us to report strong results during the first half of 2020 with a profit growth of 25%. Net profit for the period grew by 25% to 452 billion rupiah compared to 360 billion rupiah in the first half of 2019. The net profit attributable to equity shareholders of the company grew by about 10% to around 432 billion rupiah. I think so. We saw a good amount of margin growth also in the various segments, And better cost control was also exercised, which enabled us to maintain our profitability during this region. Yeah.
Okay. In terms of like activities, how things have been going on? I mean, like in some areas in Indonesia, they have kind of like relaxed the social distancing since the beginning of June. I mean, like, have you experienced like any pickup in activities since beginning of June till now?
Yeah, I think I would say a couple of things. Yes, there has been a good amount of pickup from June onwards. Yeah, like I said, the impact on mining activity was minimal. It was not disrupted, so that it was good. In terms of the retail business, where the volume dipped to nearly 50% from the February levels, there's been a strong rebound since April. Our current volume trend is, almost 80% of February levels. So I think the retail business, where we have a joint venture with BP, has recovered quite well ever since the easing of the restrictions. Our chemical business also in the month of June saw a good recovery. Yeah, normally in the second quarter, the chemical business, because of Lebanon and closure of factories, generally it is also a weak quarter. But the sectors like smelters, plantation, food have been resilient. So we've seen some amount of good recovery in terms of that segment. Textiles, rayon, and some consumer good products, these segments are also likely to improve as we go into the second half of the year. So overall, I think, we are coping quite well. And the recovery, hopefully, in case we don't see any major disruptions in the second half of the year, we are quite confident we will be able to move along as we did in the first half of this year.
So would you categorically say that the second quarter alone would be the worst, and it seems that you've gone through that. The worst is over, I think.
Yeah,
unfortunately.
Yeah, so see, some of our businesses are seasonal in nature, whether it is the petroleum distribution business or the chemical business. Yeah, and also sometimes the mining activity in Indonesia, as you know, is affected by weather also. So heavy rainfall, in the second quarter and also the third quarter normally disrupts mining activity. So normally the first quarter and the fourth quarter are the strongest quarters for petroleum sales. So that's why I think if you look at, quarter on quarter, there is a decline in terms of volumes. But if you look at the same period in the last year, we have seen some good amount of growth even in the petroleum volumes on quarter on quarter. So overall, if you see the first half of this year, growth in volumes has been nearly about 40% compared to same period last year, which is very good. And if we had initially targeted 10 to 15% growth in volumes for this year, I think given the first half performance and hopefully if, the trends as it is right now, we expect we can maintain our full year targets too. So second quarter compared to first quarter, relatively a weaker quarter. But if you see, because of the seasonality of our business, and also Hari Raya normally falls in the second quarter this year and last year. That's why you should look at quarter last year compared to the same quarter this year. And I think generally we will see pickup as we go into the later part of Q3 and Q4, where activity generally picks up. And I think with economic activity now reviving in Indonesia, we should see hopefully a better performance also in the second half of the year.
And you mentioned your target. What's your target for the full year actually?
Yeah, before the COVID thing, we had provided a guidance of about 12% to 15% growth in volumes, and also similar growth in net profit, 12 to 15%. So far, we have been on track with this pre-COVID guidance. Mm-hmm. So I think looking at the current situation, predicting things are quite challenging at this time. Yeah. But I think if looking at the way we have performed in the first half, we should be in a position to maintain this momentum as we go into the second half of the year.
Okay. So there's no revision for your pre-COVID estimates yet?
Oh, we are not revising, yeah. Okay, we hope to at least meet that particular guidance. But yeah, because of the difficulty in terms of predicting the economic activity, as most people in the across the globe are facing, we're not able to definitely say, but I think we are on track, I would say.
Yeah, it's quite a rare situation, where companies can keep the pre-COVID projections.
Yeah, I think the nature of our business, that's what Parianto also in his interview mentioned, that the resilience of our business model is key to how we run our business, how we do not take positions, how this particular thing, the risk management is done in a very effective manner. On top of it, cost control is very essential at this point in time. So we are monitoring this on a continuous basis in the board. And we hope, we should see the recovery in the second half of the year. All the more if the government incentive packages, of the 700 trillion is effectively utilized, this should also help in cushioning the impact and also reviving the economy. I would say AKR is like a barometer for the economic growth in Indonesia, because we cover extensively all segments of the economy. Whether you talk about commercial, industrial, we talk about mining, plantations, fishery, now we're also in retail. So actually AKR can be like a bellwether stock to reflect the economic activity across the country. And also another point I would like to highlight here is that AKR received this higher allocation on FAME during this quarter, where the volume of FAME allocated to AKR went up by 45%. This also is a good development. In that sense, it helps us to meet our overall target. So I think with the additional FAME allocation at 45% over the level which was allocated, we are quite confident of achieving this 12 to 15% volume growth that we have predicted during the year.
Sorry, can you remind me again what's FAME?
FAME is this bio fuel allocation. So wherein we are asked to blend 30% FAME along with diesel and then supply to all our customers. As you know, Indonesia has mandated compulsorily to blend diesel with FAME.
With palm oil,
So basically this allocation that we receive from the government is very critical, because based on that, we get 30% of FAME allocation, equivalent amount 70% will be the imported diesel component or locally sourced component, which enables us to sell. I think with the current allocation of FAME, we are on target if theoretically to reach about 2.4 million kiloliters of diesel sales this year.
Okay. And for your industrial park, since it is located in East Java, which have become the biggest hotspots for Indonesia right now. I mean, any impact of the COVID situation there on your business?
Yes, I think the amount of visitors coming into East Java at this point in time is very limited. And also our management also is very cautious about things. But good thing if you see the last 6 months of from ever since second half of 2019, GPA has managed to sell 18 hectares of land. So after the elections, the Indonesian elections, and also bringing in a lot more interest, you see the last 12 months from second half 2019, GPA has already recorded 18 hectares of land sales. And even in the first 6 months, we have recorded 9 hectares. So 9 hectares in second half of 2019 and 9 hectares in the first half of 2020. In addition to that, Freeport land also has been rented out to them, and we have lease rentals coming in from Freeport that also is contributing. We are quite still confident of booking further land sales in Q3 and also in Q4. We have almost concluded negotiations on various aspects with interested buyers. Yeah, most of them are potential customers are trying to complete their paperwork and arranging financing. So I think this is a good sign for GPA also. Yes, foreign investors, with whom we have signed a memorandum of understanding, are in the process of evaluating. There could be some delays in those projects. But still the momentum in terms of industrial estate is picking up. As I mentioned, the omnibus law, once that is also passed and also allows a lot more of foreign investors to come into the country, that will also be of good interest. In addition to that, I would say that GPA offers an integrated industrial estate with a port, utilities, and also residential. So even on the port side, we also now expanding our facilities. There's an ongoing expansion. We had a jetty of 500 meters. The length was 250 meters because two sides we can use 500 meters. So from 30 by 250, now we're expanding it to 500 meters. And another additional 250 meter length jetty is now under construction. And most probably this year will be completed. This also will enable our tenants to increase their cargo shipments and also service the other tenants across the region, other customers. Because Jipay's port is a public port. It's a deep water port with minus 14-meter draft. So it can accommodate larger size vessels. So I think we have done the right things. Our land acquisition also has kept pace. We already acquired more than 75% of the land required for the industrial estate. About 1,250 hectares already acquired. So all these things are good for Jipay. With all the utilities of first stage already completed, we are sure that we will be in a position to attract more investors to our site. But the contribution of Jipay, as you see in the first half of the year, has also contributed to the overall profit growth of the company during this period.
And any estimates on like how big is the land sales that you're potentially book in the second half? Or?
Yeah, our full year target is about 25 to 30 hectares.
Mm-hmm.
That's the budget that we are working on, 25 to 30 hectares. I mentioned we have already booked about 9 hectares. Mm-hmm. So I think potentially there is another 20 hectares of land sale that we are targeting during the second half of the year.
Okay, all right. That's pretty decent considering the situation where everybody's kind of like pulling off the brake.
Yeah. So I would say that, the Jipay is one of the most ready industrial estates and the most well developed and designed, in the sense that it offers tenants, whether it is the likes of Unichem or Clariant or Sari Roti, now with Freeport also deciding, choosing Jipay. The main considerations being, one is the location, strategically located at the mouth of the channel with access to deep water, a very large industrial estate block of 1,761 hectares. In addition to that, the utilities and other facilities have also been provided. So this offers, logistics cost advantages to our clients. In addition to that, the ease of doing business in the Jipay, we're also trying to promote that.
Okay, back to the backtrack a bit to your chemical business in the transportation. I mean, has there been any pickup of demand from your industrial customers in the since June?
Yeah. So basically, after the Hari Raya, now with the factories opening up, the volumes in June has picked up compared to May. So yes, if you look at the 6 months of 2020 compared to 6 months of 2019, first 6 months of 2019, volumes are lower by 2%. Mm-hmm. Yeah, but if you see, the main impact on revenue came from the lower selling prices of chemicals. Because chemical average selling prices have been going down. It's down about 19% year on year. So the impact has mainly been on the because of the lower selling prices. So as AKRA is a distributor, is a more commission-based distributor, the absolute amount of commission that we make on chemical business is lower, mainly because of the lower selling price. Yes, the volumes were lower in the second quarter, primarily because of PSBB and also the COVID impact. But I think with more factories opening up and also segments like smelters, plantation, food, and other sectors, like when they're talking about soap, detergents, those sectors surely should revive. With Indonesia, the government starts investing more on infrastructure and again revives the economy. I'm sure these demand for chemicals from segments like construction, plantation, also the infrastructure, will also be given a boost. Things like PVC, the assets and other things.
Any like guide, any numbers that you can throw, like in the sense like the June volume of this chemical business is somehow like how many % of like the pre-COVID, the February or whatever it is?
I would say still lower than February, But if you compare to April, the June volumes were more than about 10 to 12% higher compared to the April volumes, April and May volumes. Right. So compared to February, it is still lower, basically, yes.
Like how much lower?
I would put it at about 8 to 10%.
Okay, so that's not bad. 8 to 10% from what it was in February.
Yeah, that's right. So overall, if you see the first 6 months of 2020, the volumes compared to the first 6 months of 2019 only lower by 2%. Mm-hmm. So basically, there is some reduction in volumes in second quarter, mainly because normally during Hari Raya period, most factories would close down, yeah, in Indonesia, mostly 20 days and things. So we are already factoring in that one. On top of it, you had the COVID impact and many the consumer industries around Greater Jakarta being closed down, asked to reduce their volumes. So that impacted the volumes in the month of April and May. So, but if you look at the first 6 months of 2020 compared to first 6 months of 2019, it was only low by 2%. The more impact on chemicals was in terms of pricing.
Yeah, but considering how much damage that the pandemic has caused to the economy, and like 2% drop in your volume is pretty, kind of negligible,
Yeah, I think so. That's what I'm saying. That these are all essential chemicals which are used as raw material, whether you talk about soaps, detergents, or you talk about sanitizers, or you talk about biofuel, wherein they require hydrochloric acid, sulfuric acid. So we do only about 10 chemicals, but these chemicals, whether it's caustic soda liquid and others, are very much essential.
Yeah, which kind of like, begs the question whether the industry really stops during the lockdown.
Yeah, the main segment, like I told you, was mostly in Greater Jakarta. But when you see mostly smelters, you talk about other industries like plantation, others were relatively less affected during the month of April and May. Hopefully, we hope there will not be much of resurgence in the second half of the year. And even in our petroleum business, because a big segment of our volumes goes to the mining industry, like Kalimantan, Sumatra, and Sulawesi and other areas, which by God's grace, we're not so severely impacted by.
Okay. For the, if I may jump to like a financing plan of your business, anything that you're working on, like in the sense, like, do you need any fund or capital raising in this year?
Yeah, not at the current stage. Basically, if you see, AKRA over the last, I would say 5 years, from 2016 onwards, has already invested about 7 trillion rupiah. 7 trillion. The big investments have gone in, whether it is for increasing our infrastructure on petroleum and chemical terminals and infrastructure, or in Chipay. But most of this came funded from the internal sources and also from divestment of our China assets. So nearly 2 trillion rupiah was raised from the China asset divestments, which also helped to fund most of it. That's why even at this point in time, you see our total net gearing is only 0.37 times, relatively very low compared to what we can. In addition to that, in terms of the business for where we are investing also is on the new joint ventures with BP. So whether it is the retail joint venture for BP petrol stations or BP aviation business, which we started last year, not only we got funded from our sources, but also from BP equity contribution. But in the future, currently most of these 15 stations are run on company-owned basis, but we already now start talking to dealers. Hopefully by end of this year, we should be able to get some good agreements with dealers. So most of the future will be funded from dealers. That's why we don't think at this point in time we need much of funding, and mostly the internal cash will be enough. We just repaid our bond, which fell due in the month of July, 895 billion rupiah, mostly using internal cash and borrowings from banks, where we could get good coupon interest rate. So we have funded that on with the bank funding and from internal cash. One of our major investments which we've done in the last couple of years is expanding the Jakarta Tank Terminal. PT Jakarta Tank Terminal is a joint venture between Royal Vopak and AKRA. So we added another 100,000 kiloliters of tank storage. So this expansion is also nearly complete and will be operational second half of the year. So I think we have gone through a good amount of capital investment phase. For Chipay, the land bank, like I mentioned, 1,250 hectares already acquired. So we don't need much of additional investment in that particular one. Most of it will be funded from land sales and also from, So we will use our capital quite efficiently. Currently, our ROE is at about 10%. We're targeting to grow it to around 13%, 13 to 14% in the next couple of years. Not only with, improved asset utilization, but also contribution from Chipay going up.
This is ROE, equity.
Yeah.
Okay.
So I think we will continue to maintain our dividend payout. We have had a very strong, a good record in terms of dividend payout, averaging nearly 50 to 60% in the last 4-5 years. We've also recently announced on Monday a further interim dividend of 50 rupiah per share. So I think we will try to maintain our dividend payouts. Also, our cash flow is also quite strong. Yeah, and we have a business model where we can effectively run through our working capital from supply credit and a little bit of short-term bank loans. Yeah.
Okay. The final question from me would be: is there any like opportunistic, you know, whether that's investments or anything that the company is, you know, currently looking at? You know, I mean, like sometimes in crisis, you know, there are a lot of things that you could do while something that's.
Yeah, I think our board of directors and also our majority shareholder are very focused in what we do, in our strengths, and periodically we reshuffle assets. But I don't think at this point in time we want to, you know, we're not in the process of acquisitions at this time. It's more a consolidation phase for us. With you know, our joint ventures with BP, whether it is in terms of retail or in terms of aviation, the lubricant business, that's a growing business. GPay, there is we have completed stage 1, but yeah, we have still got to do stage 2 and stage 3. So we will be focusing on these areas, whether it is in terms of the distribution and also in terms of land sales and the utility building. So we're not in any discussions or ideas today in terms of the. Actually, this is more of consolidation and building on that, because you see the balance sheet of AKR, more than out of the 18 to 20 trillion rupiah of AKR balance sheet, more than 25 to 30% of it are on these growth area businesses, whether it is GPay or it is the BP joint ventures. So it's time for us to build up on these businesses so that, you know, our return on equity and also a return on asset will be improved over the period of time, delivering a strong growth to our shareholders.
All right, I think that's all from me for now. Unless there's anything that you would like to add or.
Yeah, I think we've covered most of that. I would maybe share with you also the video that I'm not sure we could have an opportunity to see the interview of Haryanto along with Salman. I will send you a video of that, which will also give Haryanto's analysis of the condition. Maybe even at this point, if I can, I will open that video so you can have a look at it. Just 1 minute. I will share that with you.
Sure. Thank you.
I think Salman did a good job of interviewing Haryanto to get his perspective of where this business is and what he thinks. Unfortunately, today, because he had another commitment, we could not join this. Yeah.
Okay, no problem. Yeah, I appreciate it.
Yeah, just give me 1 minute. I'll open this file.
Haryanto, thank you for spending your time to discuss AKR Corporindo second quarter 2020 performance. The company has delivered very strong performance despite a very challenging environment. What were the key drivers behind this performance?
Yes, our team has worked very hard to maintain our earning growth momentum in these challenging times. 3 key drivers of our earning are: number 1, our trading and distribution business had 2 consecutive quarters of volume growth year on year. As you remember, we have been delivering high growth since 4th quarter 2019. We have been focusing on market segment where we have comparative advantages, particularly in comparison to the smaller players. Our trading and distribution are serving basic industry that have more resilient in these challenging times. Secondly, our regular contribution from Java Integrated Industrial and Port Estate has been good. This is coming from both land sales as well as lease income. And thirdly, our strict control over our operating expenses and our improved efficiency are contributing to our profit growth. I would like to add here that our performance should dispel concern about the impact of oil prices. We have stated in many forums and occasions that our business model are based on a pass-through formula of oil prices and foreign exchange rate. This way, we do not take any stock position on the volatility of the oil prices.
Can you please highlight which business segments were relatively more affected by social distancing and the negative GDP growth?
Both chemicals and retail distribution were impacted by the shutdown of factories and social distancing. However, both have reported strong pickup in the month of June, and we expect this recovery to continue into Q3 2020. Our joint venture with BP is now moving into the next phase of opening dealers on retail side. Inevitably, I believe negotiation with interested parties has been delayed because of this COVID-19. But we expect this to resume again in Q3 2020. A social distancing is being eased gradually. We are in the process of finalizing agreement with PT Freeport Indonesia for utilities and other services.
And my third and final question is, what is your outlook for second half 2020, and specifically which key risk factors that the management is monitoring more closely?
We will do our best to maintain the current volume growth momentum. Recent increase in farming quota by about 45% will support this effort. We are monitoring the news about potential cut in Indonesia of coal production and also the development of COVID-19 infection rate. But since we have been able to achieve a significant milestone in the first half of this year, we hope to be able to achieve our year-end target also. Chemical prices are expected to stabilize with higher oil prices. Thus, this is also supporting our gross profit growth. For GP, we are still expecting another land sales of another 10 to 15 hectares in Q3 2020. We remain vigilant on credit quality of our customers. We will not compromise on this risk for the volume growth. Operating expenses are being monitored and controlled tightly. We have no hiring at this moment unless it is for critical position, and we have limited our travel as well as our marketing expenses. I would like to add here that our current performance is a testament to a stable and proven business model. Also, our product portfolio are comprising of essential products that are needed even in these challenging times. Also, our wide geographical presence in Indonesia, supported by the strong logistic infrastructure, give us a competitive advantage. And lastly, our hard work and experience of our management and employees to produce a strong performance is proven. This gives me confidence that we will maintain our business target and return on equity, both in near term as well as in medium term. I may want to add one more good news that our company has received a certification in ISO for the trading and distribution business of petroleum. This again shows our strong and our good teamwork of our management and our employees.
Thank you for giving time and giving us such a broad overview on AKRA performance in first half 2020, and best of luck for second half 2020.
Thank you very much.
Okay, that's interesting.
Yeah. Okay, yeah. I will share that link to that YouTube video for you so you can have a copy of that. Yeah, but
definitely. All right, I think that's all from me.
Okay.
Thank you for your time.
Thank you, Thank you very much.
You.
Yeah,
Thank
if you do have any other questions, you can always shoot a message to me and to Salman, and we'll keep you updated on whatever happening in the company this time. Thank you, Thank you very much.
Thank you very much. All right. Thank you. Thank you, everyone. Okay, bye.